Hello, Jay. Good afternoon. How are you?
I'm good. How are you, Ramya?
Doing very well, Jay. Earning seasons is in full force now. I know I was a little wary about, making trades for the ones that are happening tomorrow. So I was wondering if we could look at Tesla, which has already reported earnings, and Tesla has been trading a little up and down, but mostly sideways since the earnings. So how about some neutral strategy on Tesla, which could help us make some money?
Sure, Ramya. Especially on Tesla, one good thing is the premiums are pretty good. Of course,
Mhm.
around earnings it will be super high, but even after earnings is over, the premiums are pretty good. And looking at some strategies which can just pay us for waiting to see Tesla go up or go down drastically can pay off very, very well. So there is a strategy called Strangle. And when we do a short strangle, which is basically you are selling a put as well as selling a call, you just get paid for waiting. When Tesla keeps trading going sideways, you just get paid for waiting for it to break out in either direction. So what we will do is we'll probably take a look at the options chain for the nearest expiration. Probably we will look at a date which is before the next earnings date, so that
Okay.
no just capitalize on the premium before the next earning comes.
So that'll
So
also be within that 30 to 60-day range.
yes,
Okay.
yes. So
That's good.
I'm just going to the. Let me just share the screen first. Yeah. So now what we are seeing is the options chain for Tesla in the Fidelity platform, and I've just masked everything else, and I'm just looking at only the June expiry date.
Okay.
If you can actually come down and then see if we can take around 15 or 16 delta. So how about 325?
Okay.
So if you take 325 on the put side, it is around 15 delta. So
Okay.
look for the same delta on the call side. So if you go up, as you can see, uh, 450 seems to be around the same
Around the
delta.
15 delta. Mhm.
Yeah, around 15 delta.
And it
So now
has pretty good volumes also.
pretty good volume. As you can see, pretty good volume and open interest. And if we can go down here, this one is also pretty good. In fact, every single strike is having a good volume and open interest and very tight bid ask as well. So,
Right.
which is pretty good for trading. So, like I said, now let me just close this and possibly simulate this, and then show you how it will actually appear when you add this. So, I'm doing a sell to open June 2026. 325 is what we saw. So, we will pick 325 put, and then we will also do a sell call at 450 call. So, put together, this is how it looks. As you can see, if Tesla remains between 315 to 459 by June 2026, you get to retain this entire $995 premium, which is around $1,000, right?
Good.
So on the put side, it is 315. On the call side, it is 459 is the break even price. So for example, let's say if even it goes to 400 by May 21st. Actually,
Mhm.
I mean, you don't have to wait till June 16. If it goes to 400, if it stays within this range, and if it is at 400 on May 21st, you will basically book 50 percentage of the profits because you've
Okay.
received 995, and you can just close both these legs and then book this 484 and get out. So this is basically a
Okay.
short strangle. The reason why we are calling it a short strangle is on both the sides we are doing a sell
Sell.
and a sell call. So this is how the graph will look. So
So the
please,
theta works in our favor over time. So in a month's time, if it stays well within this range, then we
exactly,
have a good chance of making the profit.
yeah. But since this is both both sides are they call it naked put and a naked call on the short side. So the buying power required or the margin required will be quite significant. I mean, it will be somewhere around the range of $10,000 to $11,000. It will hold the margin for you
Okay.
to get this premium. So
So that is
ideally,
quite high, Jay. So maybe we can look at some modification to the strategy, which will take lesser buying power.
absolutely. So this one is called as a short strangle. So now, having said this, let's look at a short iron condor. I mean, they are all
And we
fancy
can,
names.
so let's look at that in part two of our video.
Absolutely.